Hey, have you wondered what's going on with the Huntsville real estate market? With all of the openings and closings, the masks and the ordinances, has it made it better, worse? What's going on? Well, today I'm diving into the numbers to look at the Huntsville real estate market. So I hope you'll stick around and check it out. Hey guys, my name is Brandon Taylor with Capstone Realty. And as I just said, today we're going to dive into those June metrics to see how the Huntsville real estate market is handling all this COVID stuff. So examining the marketplace, we're going to look at supply and demand and how those impact price. That's what we're looking at. That's what we look at every month. This month's no different. So we're going to take a look at those numbers starting now. Let's dive in. All right, so let's dive in to June. We're going to look back at June and see what happened. So here we go. The first, like I said, we're looking at the market updates. We'll look at supply and demand and that's effect on price and volume. So here we go. So first thing we look at is supply. There's a few metrics we use. This is a pretty straightforward measure because we can just look at the numbers. So first, let's look at the trend. This is since January of 2017 that we're looking at now. And you can see that supply has pretty steadily decreased over the past three and change years, from 2250 to now we have 931 homes on the market, which is not very many. We'll see how few it is in a little bit, but is not very many homes on the market for our size. That is a 15% decrease since last month, or since May. So pretty significant. We had 1,100 on the market then. And it is a 30% decrease since last year at this time. So we've had a significant decrease in listings and the supply has gone down. New listings, this is the rate at which we're getting new listings. And as you can see first, let's look at the general trends. It's a very seasonal metric. You can see each year there's a big rise in the spring, kind of plateaus throughout the spring, summer months, then falls throughout the fall and into the winter. And so we see a similar trend this year, but in June, we had a rise back to 881, which would have been the highest number of listings all of last year, and really the highest since summer of 18 back here. So that's good. That's good to get that kind of, or the highest other than this year where we had the big spike in the spring. So yeah, so it's good to get back up there, but we've had an increase by 3% since May, and an increase from last year by 1.5%. So not a huge increase, but that's another, 12 houses on the market or something like that. 13, sorry. And so that's good. So an increase in listings is a good thing, especially because we've seen that dip, but the dip wasn't as bad as kind of we were predicting. So beginning of 2020 predictions were that this year was going to be a really big year. There'd be a lot of sales, a lot of movement on the market. And obviously COVID was not expected at the beginning of 2020. So we had to adjust those a little bit. And so it'll be interesting in the next couple of months to watch if we follow the seasonal pattern, because normally June and July are the highest listing months. And so do we follow that pattern, or do we end up having kind of a July, August, September that has more listings because people may have delayed listing some throughout the spring? So we'll just have to see. Here's the new number of listings per day. So we look at a daily metric on how many listings happen every day. And we're just looking for trends. Really, it's pretty steady. We're kind of surprised. Honestly, back in May, we saw much more undulation in that 7-day moving average than we did in June. June was a little flatter. There was kind of an increase towards the end of the month. So it'll be interesting when we get to the July numbers on if we see an increase at the beginning of July to correspond to this. So yeah. You can also see that there's a weekly trend, right? Where it's like definitely a low day every Sunday. You can see all the Sundays are the low days. And then there's kind of an increase throughout the week. There's normally spikes on the 1st and 15th of the month, and sometimes the last day of the month as well, because builders often put their new listings up on those dates. And so I was a little surprised in June we didn't see those spikes that we saw in May. And if we look backwards, we saw those in April and March as well. And so that's interesting. I'm not sure why the builders didn't list as many. Maybe they've listed them previously or just kind of a fluke. I'm not sure. All right, so that is our look at supply. It all points to, hey, listings are going up a little bit, but the overall supply is not sufficient or is down a lot compared to previous years and months. So now we'll look at closed sales. This is our best metric in some ways. We'll talk about metrics in general. So metrics in general all have pluses and minuses, right? You just have to know what the weaknesses are, right? So closed sales is a great metric because we get a good price, good days on market. It's a deal that actually happened. But the downside is there's a 30 to 60 day lag from when something goes under contract until we get a closed sale. And so in a lot of ways, these numbers are going to be representing the market 30 days ago or 45 days ago more than they are representing it today. But it's still useful, it just has some weaknesses. So we have 789 closed sales, which is the most of any month except for last July. So yeah, so that's significant. So it's a big spike over both May, where we had 688, so it's a 14% increase in closings. And last June, we had 741, so it's an increase over that as well. So it's the biggest since last July. It's a big spike from both last year and last month. So we are seeing an increase in demand from that metric. Next is average days on market. If you look at this slope, you can obviously tell that days on market has had a sawtooth kind of decline over the past 3.5 years, and we are reaching very low point. We're at 26 days, which is similar to last month, but is a decrease by about 9 days from last year. I also like to look at median. So this is days on market is kind of sensitive to high numbers, and things like model homes and super expensive properties sometimes sell on the market for a couple of years, and so they can kind of throw off the average. So the median, right, is the middle point. If you line up everything that closed last month, what was the very middle number? And you'll see that the median days on market was 4 days. So half of all homes sold in 4 days or less in the market, which is a very fast market. That's a decrease from May, which was 6, and June last year, which was 11. So significant decreases of an entire week less on the market from last year. Pending sales. Pending sales has weaknesses as well, but it's another metric that's useful. It tells how many homes went under contract during the month. So now, getting a contract is not getting a sale, something like 10 to 15%, depending on who you believe, close. And we don't get sales prices for pending sales, so we can't follow price for sales as well, because we don't know what it's under contract for. But we had a significant increase in pending sales this month. We're up to 920, which is the most during this recording period. So in the last 3.5 years, we've never been above 800 except for last month, and now we're sitting at 920. So that is a lot of pending sales. And significantly, it's more pending sales than we had new listings. So we had a net loss of listings over the last month. So yeah, 14% increase from last month, which was the highest before that, and 16% from last year, which was the highest last year, or among the highest last year. So pending sales trends, you can see, looking at those trends, towards the end of the month, it seems like we had a significant increase. If you look at the 22nd of June there, from there on, the 7-day and 14-day moving averages were both above, all the way up to significantly above that 8-day average. So if we're following the last trends at the end of the month, it seems like we were trending up for more pending sales. All right, one more thing we look at for demand, and that's the availability of money. And so we have reached an all-time low for the 30-year fixed rate mortgage and the 15-year fixed rate mortgage at the same time. You see this over the last year. This trend has been a gradual decline for both of those rates. And if you zoom out a little bit, this is all the way from 2008, so back in the financial crisis era when we were up high. That's what the shaded numbers are, all the way till today. And you can see 2013, September, right before September, so August of 2013, it looks like we had reached previous lows, and those have both been matched or exceeded now. And so we are literally in the lowest interest rate environment in history for a primary mortgage. So money is cheap, which should indicate an increase in demand as well. This is a little metric that I do. It's a daily new listings minus pendings. It's just counting those. And you can see towards the end of the month, we went where we were negative both in the 7-day and the 14-day moving average. So we had a negative trend where we were literally losing houses each day, both over 7 and 14 days towards the end of the month. And so that suggests that the balance is trending even more in the seller's direction. So all of that, we talked about how supply is very low. All the metrics point to that. We've talked about how demand is increasing and is pretty good. So those both point to a stronger seller's market, and we can see that prices are going up correspondingly. So we had the median sales price. I like to look at median sales price rather than average, because a single very high price listing really can throw off the average and not really represent the market. But the median gives us a little bit more stable trend, I think. So the median price is $248,000, which is a 3% increase since last month and is a 10% increase since last year. So significant increase in pricing over the past year. So that's our market report. We have are still in a strong seller's market. We are very supply constrained, which means we need more listings. So what's that mean? For sellers, it means it's a great time to list. You can be kind of aggressive in your pricing. You can ask maybe a little more than the comps are showing, because there's probably been appreciation since those comps were made. For buyers, it means we gotta go out there aggressively. We have to look closely, especially in more competitive markets like Madison City, the center of Huntsville are more competitive markets. There's even fewer listings if you look in those kind of micro markets. And so you gotta be real aggressive. You have to be looking constantly. Your offers need to be aggressive both in price and as few conditions as you can make them. So that's our market. Let me know if you have any questions. I would love to help you out. Thanks, guys.